A big day at Uber headquarters where we are this morning. Uber reporting quarterly results. The ride-sharing company achieving what is a milestone, a first ever GAAP operating profit in the company's history. Earnings coming in at 18 cents a share. That was much better than the one-cent loss that the street had been expecting. Revenue, $9.23 billion during the quarter. It's a little bit below estimates. Uber generated the $1.1 billion of free cash flow during the quarter. And joining us right now is the company's CEO, Dara Khosrowshahi, the CEO of Uber. It's great to see you, and it is a milestone. I was actually thinking about this when we sat together. When you took over, by the way, I was looking, bookings were $14 billion, $33 billion right now. And when we were sitting together, EBITDA was off, negative $869 million. Free cash flow was negative $877 million. And so today is quite something for you.
It's a great day. It's the amalgamation of a ton of work of everyone on the Uber team, and obviously the drivers and couriers who are on the platform. But the performance is there, right? We've got gross bookings over $33 billion, up 18% year on year. EBITDA record $916 million, up over 50% year on year. Free cash flow of $1.1 billion, and our first profitable quarter, $394 million.
You said this was going to happen this year.
Yes.
Did you think it would happen? And I remember trying to get you to say when in the year. Did you know that you were on track at this point?
We thought that we would be on track either in Q2 or Q3. We tend to under-promise and over-deliver. And everything came together this quarter. The team executed really well, and we plan to be profitable for, every quarter going forward.
I don't know if you can see the stock. The stock up is now up about 4%, almost 5%. It at one point had clicked up over 6%. But really, you look back even towards May, and it is now a straight line up. How do you think about the company's valuation in this context?
Well, what I can control is what we're doing operationally, the service that we are offering to our consumers. And the service keeps getting better. Our audience grew by 12% on a year-on-year basis. The frequency of use by our actives grew 9% on a year-on-year basis. You combine that with cost discipline, you get free cash flow over $1 billion a quarter. The stock price will take care of itself, and I think the stock price is now reflecting a view from investors, which we've had all along, which is this can be a scale platform on the internet that can be very, very profitable. And because we have mobility delivery all on one platform, we've got a competitive advantage over the other players.
Let's just talk about what that is, though, because we went through Uber 1.0, which was probably the Travis Kalanick version of it.
Yeah.
I think you might have just completed 2.0 of sorts. I don't know if you can take a victory lap on that front just yet.
We're not ready for victory laps, but we've come a long way.
But and that was, let's be honest, that was almost a daily knife fight for you in terms of trying to get through it all. What is, to the extent you now are a platform, a profitable one, what does the 3.0 version look like?
Well, I think the 3.0 version for Uber looks like essentially are connecting every single vehicle and driver who is available to take you any place in your local city. And to some extent, what that translates to is you're an operating system for everyday life in a city, right? When you combine that with ML and AI, we essentially are there for you. Machine learning, artificial intelligence. We essentially are there for you. Any place you want to go, anything you want to get delivered to your home. As we get to know you more and more, we become more of a utility and more of, a service that you can't do without.
How concerned are you about what's going on with your competitor, Lyft? They've obviously been challenged, in part because of your own success, but it very well may be, and I will see, whether they need to get into a pricing fight with you all over again.
Well, Andrew, I don't spend too much time worrying about Lyft, so to speak, but we don't see any evidence of a pricing fight at this point. Lyft was not price competitive with us a year ago. They are price competitive with us now. And now we can focus on competing based on brand, based on service, based on innovation. And with products like UberX Share and Reserve and our U for B for Enterprise, we think we can out-innovate.
But you don't think as they try to capture share, and as you said, now they're price competitive, that they are going to make it a lot more challenging?
I think that the era of pricing, of fighting purely based on price is over, right? That was 3-4 years ago when it was just about volume, but investors now want profitable volume. And if the only thing you have to offer is a lower price, you're not offering much ultimately. You've got to offer brand and service. And all the evidence that we see as far as Lyft goes and our other competitors are they're trying to compete in the right way. Right. We think in that world we have an advantage. We've got scale.
What do you tell customers and maybe policymakers about this, though? You came into lots of cities across the country at very low competitive prices. Talk about pricing.
Yes.
In some cases, were so successful in that realm that you put a lot of folks either out of business or shifted the business, became the successful one, and now the price has gone up.
Well, the prices have gone up along with inflation everywhere, right? And when you look at the prices going up, a significant portion of that price is being passed on to actually drivers. So, for example, drivers, couriers earn over $15 billion, including tips on our platform. That was up 19%, which is up faster than our overall gross bookings growth that was up 18%. So the increase in pricing is really going, the vast majority of that is going to drivers and couriers, and we think that's fair.
That's happening in a very positive direction when it comes to mobility, meaning people in the cars, and delivery. Less so in the freight space. That has remained a challenging spot for you. Why?
It has, because when you look at the consumer and what the consumer is spending on, the consumer continues to spend increasingly on services. If you look pre-pandemic, spend on services was about 69% of spend. It's still only 67% of spend. So more money is going towards services, which benefits our mobility delivery business. Freight, to some extent, is a hedge there. Freight grows when people ship stuff, when they buy stuff. This year, people are buying more services. Our freight business is down. We're adjusting costs, but our mobility and delivery businesses are growing at huge rates and larger than ever.
If we were sitting together, call it 3 years from now, and we had a pie chart, mobility, delivery, freight, I don't know, you want to put advertising in there as the other?
Absolutely, yes.
Okay. How does that pie chart look?
Well, first of all, the whole pie is much larger, right? But I think all of the pieces of the business are going to grow at significant rates in the teens or the 20s. Advertising is going to be the biggest growth area for us because we have a huge audience, over 130 million audience coming at us on a monthly basis onto the platform. This is a high-end audience. They're very engaged with our platform. They're going places. And what we're seeing in advertising is $650 million now of run rate revenue, growing very significantly, and we're well on our way to $1 billion plus next year.